What's up, sons? It's Blind Red with Son of a Tech once again, and with the Bitcoin halving up on us here in the next couple days, I wanted to talk to you about another layer one proof of work cryptocurrency that is going to be going through a halving as well. It's called Radiant, and this is one that I've been stacking for quite some time on my GPUs due to the fact that it is pretty low in power requirements and heat. So it's been one that you can dual mine with as well, and has basically kind of been under the radar by and large because of some of the other layer one proof of work blockchains that have been coming out. What I would liken this to would be along the lines of the kaspa kind of train, or of course the Lithium train, and Radiant really seems to be the last one on this train, the last cart on this train of the new layer one proof of work blockchains that have been coming out. And that is going to be relevant because it does mean that you have a little bit more time on the Radiant blockchain to build a bag than if you were going to be looking at either Lithium or the kaspa side of things, with kind of kaspa taking the gauntlet very early on with this bear market and kind of leading the way. And then we kind of had Lithium follow up there, and it all goes along kind of a typically similar timeline. And that timeline is really based around the type of mining equipment that is utilized to mine these particular projects. You see, most projects for layer one blockchains start out being mineable by CPUs, and then they naturally progress into being mineable by GPUs, and then they end up being mined by FPGAs, which stands for Field Programmable Gate Array, and then, or gate array, sorry, excuse me there. And then eventually it ends up being mined by ASICs. Now, if we take a look at, let's say, kaspa. Kaspa went from the CPU to the GPU, and then it went to FPGAs, and then now it has a pretty robust ASIC community, with Bitmain getting in and making those ASIC units. As far as Lithium, we are really on the cusp with Lithium basically being mineable with ASICs, with Goldshell releasing theirs, and then a rumor now here coming out with Bitmain going to be releasing their ASIC for Lithium here soon. And what we have seen, of course, in relation to that, if we look at the prices of Lithium and we go over here, you'll see that that has resulted in, of course, a nice little pump over the past year. So if we go here, you'll see we've had a nice pump up for Lithium. And obviously, if you took a look at kaspa, it's a similar situation. And that is just due to the amount of capital that gets injected into these cryptocurrencies once you kind of move into the ASIC range. Now, if we look at in comparison to something like Radiant right now, what you'll notice is there was a big tick up and then it came back down. And that is a lot due to the fact that Radiant really hasn't had this natural progression behind it, and it's lagging behind these two other options. That doesn't mean that it's a bad project though. And in fact, if you look at the tokenomics, etc., and some of the technologies behind it, it's comparable to both Lithium and kaspa. On the tokenomics side of things, while it doesn't have the same emission cycle where it's that kind of chromatic emission cycle on the block reward reducing, over time, it does it differently in the fact that it runs on a traditional halving cycle and similar to Bitcoin. So you can see here in the next 23 hours, Radiant's going to go through a halving, and that is going to reduce the block reward from 50,000 to 25,000. And if that wasn't enough, as it were, this is kind of coinciding with the Bitcoin halving as well. Now, we only have FPGAs available for Radiant right now. We do not have the ASICs available on that network, so that there's still the ASIC play that can be pointed towards Radiant. And once that ASIC play is put into place, that's when you start seeing, of course, something like this from the kaspa side of things. So you really want to, when you're looking at these projects, take all of these things into consideration. duration. And because we're going to have basically a reduction in reward, we're going to have a higher demand than a supply of newly minted Radiant coming into the market. So it puts it in a pretty good spot. And to demonstrate that, of course, too, I went ahead and took a look because at the market cap comparisons, which you can do on marketcapof.com. And if we took it and looked at Radiant compared to the market cap of kaspa, it would have 139x, which would put it at 26 cents per Radiant. And that's because even the total supply of Radiant is actually less than kaspa at 21 billion coins. And if we looked at kaspa, it's 28 billion coins. So you actually have less supply on the Radiant side of things than the kaspa side of things. So the price per coin would go up theoretically. Now, do I think it's going to 100x? For some reason, people seem to tweet at me and say that I've said Radiant's going to 100x. I've never said that. I'm much more conservative. So where am I at? If we were talking about comparisons and market cap of, I would presume that we would be closer to something along the lines of Alephium. Now, Alephium is currently at $2.65, and if we had the market cap of Radiant or of Alephium for Radiant, we would see basically 2 cents, a 10x. This is a much more reasonable prediction over the next year, in my humble opinion. So if I'm looking at Radiant and I'm looking at when I would want to get back out and kind of recover some of my profits and that sort of thing, or an ROI on my mining rigs and so on, how long I'm going to hold the Radiant that I've mined, I'm looking for that 2 cent mark personally. So this is kind of what I'm looking at. We are, like I said, going to be seeing a halving of Radiant here soon. And then really the next catalyst that I'm keeping an eye out for as it pertains to Radiant in particular is going to be ASICs onto the network. And once that is kind of confirmed or announced, that is when I think we'll see a nice pump up from Radiant. In the short term, probably only going to be like a 2 to 4x based off the tokenomics and the halving and the reduction of the newly minted Radiant hitting exchanges. Obviously, the large miners with the FPGA miners are going to be the ones that will be dumping that mined crypto onto the exchanges. And I think that, maybe initially there will be a little bit of a price suppression, not dissimilar from the halving effect on Bitcoin. And then once the new supply and demand kind of gets settled in, that's when we'll start to see the raise in price of it. So Radiant's a really interesting one because it really is, like I said, from my perspective, it's that last layer one blockchain of this current cycle left to get a significant pump up as opposed to, like I said, the other examples here, which would have been your kaspa and your Alephium. So if you're asking like what my thoughts are on what could possibly be the next opportunity from a layer one proof of work blockchain, I'm going to say Radiant, and that is kind of what I've been saying here for a little while. Like I said, I'm more conservative, probably somewhere between a 2 to 4x, not financial advice, of course, over after the halving. And then if we start to see ASICs deployed to the network, I'd be looking at probably another 10x from there. And if we really saw it take off, maybe it could be somewhere along the lines of a kaspa. But the thing is like Radiant and Alephium aren't quite on par with kaspa from a technical perspective, in my humble opinion. Not quite as revolutionary. They are revolutionary in certain aspects. They do different things a little bit better. Like Radiant's fees are fantastic, but obviously fees always look good until there's more demand on the network. So you kind of have to wait to see how that plays out. It's already, hybrid UTXO like the other chains. And the other thing that it has, I think, ahead of other ones is that it is already ready for real world assets and tokenization. So that will be easily adopted here as well. So keep this in mind if you are looking for another layer one project that you want to mine. This one's a really good one to dual mine on. Anything else, you add it with Ironfish with Fish Hash, or you add it with Ergo and Autolicos V2. There are a lot of different options that you can basically dual mine it, build yourself up a little bit of a bag, and just kind of ride it out. Use the rest to cover your power bills and see where it goes. Now, I've been doing this for a while. on the Radiant side of things. I had already done it with Kaspa. I had already done it with Alephium. Once ASICs start getting in the mix, I'm out. That's kind of the way I play it. I'm a GPU miner. I go, super early on whenever I can mine with CPUs, with a few of my CPUs, then I'll mine with GPUs. And then as soon as we kind of get into that FPGA, I start backing off, unless, of course, there's a dual mining option, which, of course, Radiant has, which is why I was mining it. And then once we start to get those ASIC announcements like we did on Alephium, we start to see those numbers shoot up in hash rates, I drop off and then kind of run from there, sell the high like I did with Alephium here, and then kind of ride it out as far as that's concerned. So that's kind of my strategies when I am looking at a lot of these things and what I'm looking for in a lot of these projects. I did want to say as well that the developers of Radiant had given praise to Alephium, saying that, they were very impressed with Alephium's technology, and that was what Radiant was aiming to do initially. So we'll have to see if Radiant is going to continue the development and continue pushing forward and try to come up with something competitive along those lines from a fees perspective and from a speed of transaction perspective. But that, as of right now, that's up in the air. There's a lot of other news, though, that we will be covering on Radiant, so let me know if you're interested in that. Thanks for watching. Be sure to hit the like, comment, subscribe, and notification bells down below. If you're interested in kind of my mining strategies and following along with those, you can check them out at sonofatech.locals.com. And if you are just new getting into cryptocurrency mining and you want to know basically a bird's eye view of what I do and my strategies, check that out at sonofatech.com. I will see you next Tuesday.